And hope everyone's doing well today. Today, we're going to show you all how you can rebuild your credit if you filed a bankruptcy in the past. Okay, so this means that you filed bankruptcy. This could be a Chapter 7 bankruptcy, also a Chapter 13 bankruptcy as well. So if you or someone that you know has filed bankruptcy and they're looking to increase their credit score and rebuild it the right way, let them know about this video right now. All right. So let's go ahead and go into the first things first. Okay. So number one, let's go ahead and go with it doesn't matter if you have a Chapter 7 or a Chapter 13. Now, these are the most common bankruptcies that you see consumers file. Okay. Now, businesses, they have different ones like Chapter 11 and things of that sort. But either way, this is going to be Chapter 7 or Chapter 13. Okay. So here's the thing. I want to make sure you guys understand that even if you have a Chapter 7, that doesn't mean that just because they wipe everything away, and I'll break down what these mean here in a second, just because it gives you a fresh start doesn't mean that it automatically builds itself, okay, or rebuilds itself, okay? So first off, let's break down what a Chapter 7 bankruptcy is. A Chapter 7 bankruptcy is going to be a bankruptcy that essentially wipes everything clean, okay? That means that you have a certain amount of debt and the attorneys, they were essentially able to work something out and you essentially were able to wipe all of that clean, okay? And so now you're starting with a clean slate. Now, this takes about 3 to 4 months to discharge, which means to be done with, okay? Now, it's still going to be a public record, so it's going to show up on your credit report, and it's also going to show up on various databases as well. This is why when people file bankruptcy, after their bankruptcy is discharged, you're going to get letters from dealerships. You're going to get letters from a lot of different people saying that they can help you after bankruptcy. We're going to talk about all of that right now, okay? Then you have a Chapter 13 bankruptcy, okay? So a Chapter 13 bankruptcy is essentially you're in a position where it's not everything wiped away clean, but they put everything on a payment plan, okay? So now you typically have to qualify for a Chapter 7 where it's a hardship. They have to see that there's a certain amount of money that's not coming in. But I have seen some people with higher income, 6 figures and higher, qualify for a Chapter 7. It just really depends on the situation, okay? So let's go into what you need to do right away once this happens, all right? So once you are in this bankruptcy, where's my eraser? Okay. So now that, let's say, for example, we're going to go ahead and let's say that we're going to go ahead and start with a Chapter 7, okay? Because the rebuilding process is close, but it's not the exact same, okay? So let's go ahead and go with a Chapter 7. So with a Chapter 7, the very first thing that you want to do is one, you have to, I'll put it to you like this. You don't have to wait, but it is easier if you wait until the bankruptcy is discharged. Okay, so number one is going to be wait until it's discharged. Okay. So again, a discharge means that it's done. It takes about 3 to 4 months for the bankruptcy to be discharged. Okay. So you got to wait till it's discharged. All right. Now, like I said, it takes 3 to 4 months. Okay. Now, number two, now that you've waited till it's discharged, and I'm going to explain why you have to wait here in a second. Now that you've waited until it's discharged, you now want to go ahead and get a secured. Well, you can apply for, let's just say this, you're going to apply for a Capital One credit card, okay? Now you want to go unsecured. So I'm going to go ahead and put a U right there. You want to go ahead and apply for a Capital One unsecured credit card, okay? Now when you apply for a Capital One unsecured credit card, what does that mean? That means that there's a chance that you don't have to put down any money, okay? You don't want to be in a position where you have to put down some money. You most definitely want to try to save as much as possible. When you go with a Capital One credit card, they have a platinum credit card that pretty much approves everybody, okay? And when you get approved for this credit card, then you don't have to put any money down for a deposit. Now, this can there's a chance that you may get declined, not because you filed bankruptcy. Capital One won't decline you just because you filed bankruptcy. They will decline you, however, if you included them in the bankruptcy, okay, for this particular credit card. And sometimes they'll decline you for other reasons, but I don't want you to think, well, oh, because the number one reason why people don't rebuild their credit after a bankruptcy is normally because they don't think that they can rebuild their credit after a bankruptcy. They don't know which banks to go to. We're going to go over all that today. So you're going to go with the Platinum Capital One credit card, okay? Now, number three. Well, actually, let's go into this is really like a two, like a 2A, okay? If you get denied for a Capital One unsecured credit card, you then want to go ahead and apply for a Capital One. I'm just going to put Cap One, a Cap One secured credit card. Okay. Now, it's nothing wrong with a secured credit card, especially if you start off with Capital One. The reason why I love Capital One is because you can actually add up to 5 authorized users on this credit card. Okay. So you can add up to 5 authorized users on this credit card. All right. And then they have 3 different tiers. Okay. So tier number 1 means that you have to give a deposit since it is a secured credit card. And so tier number 1, you have to give them a $49 deposit for a $200 limit. Okay. So let me go ahead and write that down. I'll put this in a different color so you guys know what I'm talking about here. Put my eraser up there. So this is going to be, let me get down here. So this is going to be $49. Okay. And you're going to get a $200 limit. Okay. So $49 for a $200 limit. Okay. So now that's tier 1. Then they also have tier 2. Okay. Now tier 2, I'm just going to change this right here because I know you guys can't see below here. So tier 2 is going to be $99 down for a $200 credit limit. Now, before I tell you guys about tier 3, 2 things, okay? 2 things. What determines the tier that you qualify for? When you apply, they will let you know. Some people make the mistake of applying for a secured credit card first, and they never even try for a unsecured Capital One card. The reason why you want to go unsecured first is so you can get approved for the credit card without having to give a deposit. Okay. So now I would rather apply, get denied, and then go secured versus going secured first and then you get approved for $49 or $99 and you could have gotten approved for the platinum unsecured. You guys see where this is going? So that's number 1. Number 2, make sure you guys go ahead and download my free credit guide because the next section I'm about to go into in a second is there. I'm going to talk about an account that you can get right now, and it is going to increase your credit score. Okay. So again, you could download the free credit guide. There's a link in the description if you're watching on your phone. If you're watching this on your TV at home, you can scan the QR code right there up under me. Okay. And then you have, of course, let me erase this real quick. Now that's tier 2. And then you have tier 3. Okay. Now tier 3 is going to be $200 down for a $200 deposit. Okay. So you give them $199. They're going to give you a $200 limit. Now, this is going to be your limit. Now, when you get approved for the credit card, how much do you want to use? You only want to use 10% or less. Okay. How much again? 10% or less. So if the limit is $200, that means you want to spend how much per month, class? You want to spend $20 a month. Now, you don't have to manually do this. You can easily just look at one of your bills in the house. It can be like one of your subscriptions, like Apple Music, Hulu, Spotify, Disney Plus, whatever you got. We got them all, right? And you put it on that credit card and then put that credit card on auto pay. That's what you want to do. Now, let's say, for example, because this is possible too. Let's say, for example, you apply for the Capital One unsecured credit card, you get denied. You apply for the Capital One secured credit card, you get denied, because that's possible that you can get denied. Don't worry, I got something that no one gets denied for. And even if you do get denied for it, I got an easy way out of this situation. Okay, let me move this up over here. I'm knocking. Okay, so if you get denied, let me move all this stuff out the way. Now, mind you, this also works for Chapter 13 as well, but Chapter 13 is slightly different, but you can do this for Chapter 13 as well. I don't want you guys to feel like you guys are left out. So I'm going to go ahead and put Chapter 7 and 13, okay? Because 13 is a little different, and I'll explain that in a second, okay? So now, if you got denied for both of those cards, what do you do next? Let me show you what you do next. The next thing that you want to do, you want to go ahead and then apply. This is option 3. This is going to be Open Sky credit card, okay? Open Sky credit card. Now, Open Sky credit card approves everybody. The only time that they do not approve you is if you fall into 2 categories. Category number 1, people that owe them money. Okay. So now, yes, people do owe money on a secured credit card. I'm gonna have to do another video on that. But the short version means that so Open Sky, they only do what they now have an unsecured, but you want to go the secured route because they don't do a credit check. So everyone's approved. If you do owe them money, or if you did put them in a bankruptcy, if you put them in a bankruptcy, then it's no big deal. They're more than likely going to approve you again. But if you just close them out and you owed them money and they were not a part of your bankruptcy, then what you have to do is you're going to have to pay them what you owe them. But don't trip, because again, you gave them $200 from the beginning. Don't forget that. A lot of people forget that. They give these secured credit card companies money, and then once they give them the money, they then swipe the card. They don't pay the card. The card now becomes a charge off, even though they have your money. By law, they cannot apply that security deposit because it's a security deposit, right? And they cannot apply that to the balance. So you have to tell them that you want them to apply that to the balance, okay? But either way, the same rules are going to apply. You're going to apply. There's no credit check. It's an automatic approval. 98% of people can get an Open Sky secured credit card, okay? Now, once you get approved for that card, the same rules are going to apply. Well, Calvin, can I give them more than $200? Yes, you can, but it's a waste of money. I've had people say, well, I'm going to give $500 to for a secured credit card. My bank wanted me to get a secured credit card with them. It was only $500. Listen, credit is not about how much you spend. Credit is about what are you doing with the account, okay? So again, you spend $200. This is the smallest amount you want to spend unless we go with the Capital One. But of course, we're going here if you got denied. So if you have a $200 limit, how much do you want to use per month? 10%, which equals $20 a month. Okay? Don't get caught up doing anything else. Now, that's the first account that you want to get. You want to get a revolving account. There's 2 types of accounts that are on your credit report. You have revolving accounts and you have installment accounts. Revolving accounts are accounts that revolve over time. That means that you borrow money, you pay it back. The balance always changes. An installment means that you borrowed money, typically a lump sum. There's an interest rate attached to it, and there's monthly payments, okay? So you need a revolving account first because this is the easiest that's going to ride with you all the way through, okay? So now let's go into the next piece. We're going to go into getting an installment account, okay? So now an installment account is going to be the easiest installment account that makes the most sense, that's going to help you build your credit, is going to be, this thing is moving. Let me make sure I didn't move it too much. Okay, good. Y'all are fine. All right. So now it's going to be a credit builder, a credit builder. Now, there are a lot of credit builder accounts out there. And here's the thing, I have my favorite credit builder accounts inside of my free credit guide. So go ahead and scan the QR code if you're watching on your TV right now, or if you're watching this on your phone. I have a link in the description. It's my free credit guide. Inside of that guide is a credit builder account. Okay. And they're very inexpensive. There's a one credit builder account that's $5 a month. I think it's either $5 or $10 a month. And you pay that every single month. And that's going to report to all three credit bureaus every single month and help you build your credit. Okay. So this is the second type of account that you want to have on your credit report. Now, let me go ahead and pause real quick because I know what some of you guys are thinking. Well, Calvin, I just got out of bankruptcy, right? Or you may be in a chapter 13. Now, chapter 13 bankruptcy is where it's a payment plan and it takes about 4 years to discharge. So now, can you get these same accounts while you are in bankruptcy? The answer is yes. Okay, the answer is yes. Okay, you don't have to talk to your trustee, you don't have to do all that stuff because this is not debt. This is essentially you paying into it so it can report to the credit bureaus. When you get that credit card, those credit cards that I talked about earlier, they specialize in helping people rebuild their credit if they have had bankruptcies in the past, or if you have a bankruptcy right now, if you're in a chapter 13, or if you're in a chapter 7. But again, since the chapter 7 is so short, I strongly recommend that you just wait those 3 or 4 months. Okay. So that's the second type of account that you want to have on your credit report. Now, once you have those accounts, now you say, well, Calvin, can I get more accounts than that? You can. I mean, here, I tell my clients, start with those two first. The reason why you want to start with those two accounts first is because you want to show banks that you are reestablishing yourself, okay? That you're rebuilding your credit, that you're starting fresh. What some of you all do wrong is you have your bank account with Chase Bank. You have your bank account with Bank of America. I'm just using these for examples. And then you apply for a credit card, you get denied. You're trying to figure out why, because they don't want to be the first bank that gives you an opportunity, that gives you a second chance after you just promised these other people that you were going to pay them. Okay. So you have to, it's best that you go this route. Now that you have those two credit cards, what's going to happen? You're going to start getting offers. Okay. You're going to start getting offers in the mail. You're going to start getting offers in your email. You're going to start seeing offers, typically everywhere. Okay. Because once you file bankruptcy, that public record then triggers. That's why dealerships start sending you stuff in the mail, and a lot of other people start sending you stuff in the mail so you can start rebuilding your credit. Okay. So the next thing is going to be, let's go ahead and go here. This is going to be let's go ahead and talk about more about credit cards. Okay. Now that you have those credit cards, you started off with, okay, you started off either with a Capital One, so Cap One, or you started off with an Open Sky. Okay. So now you've been paying those. After about 3 months or so, you're going to start to see different offers in the mail. One of the offers that you may get is a Capital One Platinum unsecured credit card. Or if you were secured at first, it can upgrade from secured to unsecured. You can do that as well. But what you want to start doing is now you want to have about 2 to 3 accounts. Okay. So 2 to 3 accounts. And now, why do you want to have 2 or 3 accounts? Because now you want to start building that foundation. Okay. So you have 2 to 3 accounts. You started off with 1 or 2 of these. You had the credit builder, and now you're going to start getting the attention of Discover Card. You're going to start getting the attention of level 2 or tier 2 Capital One cards. Now, cards that you want to ignore, cards that you want to throw away in the trash if you get these offers in the mail. Let's go ahead and talk about what credit cards that you do not want to go with. That is a complete waste of money. Now, I'm not going to list all of them, but if they look like this, you don't want it. Okay. Number 1 is going to be Credit One. Now, credit one is not a bad credit card. Okay, I want to start there. It's not a bad credit card. It just has a lot of fees that don't make sense. There's a increase your limit fee. There's an authorized user fee. There's a non-usage monthly fee of like $9. Yes, they charge you a fee just for not using the card. There's also an annual fee. Those are just 4 fees. I haven't even go to the rest of them. So that's what that is. Okay. So again, they charge you just for not even using the card. If you want a credit limit increase, they're going to charge you money just to get a limit increase. Next is going to be First Premier. First Premier. Again, another credit card that the issue is with these credit cards is that you will never meet anyone in your life that has a $5,000 credit one limit. You will never meet anyone in your life that has a $10,000 First Premier credit card. Okay. These credit cards are not made to be level 2. These are like level 1 credit cards, but they make you think that they're level 2. They make you think that you're upgrading, that you're getting more banks' attention. These are the same type of banks. Do not go with them. These are just wallet holders. You don't even want to don't do that. The next one is going to be, you have First Premier, then you have First Progress. I know what you're thinking. Well, Calvin, they was the first ones to send me something right after my bankruptcy. Yeah, I got you. But you want to use those other ones. Now, is it the end of the world if you have these credit cards? It's not the end of the world. You just want to make sure that you get in and out with these credit cards. You want to get in and you want to get out, okay? Which means that you want to get a bad credit card or a credit card that's not the best or a credit card specifically for bad credit. And then once you start getting the attention of other banks, better credit card companies, then you want to go ahead and close these out. Okay. So you want to keep these credit cards no longer than about 3 to 6 months. After about 3 to 6 months, okay, you should be getting the attention of other banks. If you are not getting attention of other banks after having these types of credit cards or the ones I taught you about before, that means you're not using the credit card the right way. What is the right way? Paying on time, turning on auto pay so you can make sure you pay on time and use only 10% or less of the credit card. Now, is it the end of the world if you use more than 10%? It's not really, but you don't want to get in the habit of using too much of the card. Plus, the less you use, the lower your utilization is, and the higher the chances are that you're going to qualify for other better credit cards and just be reached out to by other better credit card companies in general. Okay. Now that you got the credit cards out the way, let's talk about home ownership and let's talk about getting a car. Okay. Don't worry, I'm gonna have you guys out of here soon. All right. So check this out. So now let's go ahead and go into, hey, I filed bankruptcy. I now got the credit cards. I'm making some things happen. Now let's go ahead and go into buying a car. Okay. So now I want to buy a car, and I just filed. Well, I didn't just file, but I filed bankruptcy. Okay. Now let's go into buying a car. Now I do want to say something to you guys real quick. Now, if you're a part of the 850 Club Elite, now in the Elite, we break all of this down. Okay. Now, if you have credit questions, if there are some things that you want to accomplish, if there are some things that you want to do this year, this month, next year, listen, you need to get around people that are in situations just like you. They're in the 400s, they're in the 500s, they're in the 600s. They're trying to get to the 700s. They want to buy rental property. They want to buy a home. They want to get a condo. They want to lower their car payment. You need to join the 850 Club Elite, okay? I got this link inside of the description as well, and you can scan this QR code right there in front of you, okay? Now let's keep going. So now buying a car, all right? So now with buying a car, here's the thing about buying a car after bankruptcy. Things that you got to know off top. You will have a high interest rate. You will have a high interest rate. What's a high interest rate? Everybody's definition of high interest rate is different. I like to say anything that's double digits, okay? So that's 10% or more is a higher interest rate. Some of you guys are like, well, I ain't paying no 8% or whatever. Again, let's just keep it simple, okay? You're more than likely going to pay a high interest rate. Now, the only way around this is to get a cosigner, okay? But assuming that you don't have one, let's keep going. Now, Then another thing as well too, expect to put money down. So you're going to have to put some money down. Okay. It's nothing wrong with putting money down. Again, banks don't trust you yet. They don't trust you yet. And since they don't trust you yet, you have to show them that you're going to put skin in the game. Now, putting money down is skin in the game. Okay. And so, again, that's what you're going to have to do there. Then, number three is that more than likely, now this can vary, but more than likely, they're going to put a cap on how much you can buy. So they're going to put a cap on buying power. Okay, they're going to put a cap on your buying power. Now, what does that mean? It depends because everyone's income is going to be different. But just know, because you had a previous bankruptcy, you can't go and say, "Hey, I want that $50,000 car right there," and your income is, let's say, $60,000 a year, because they're going to cap you at it's a monthly payment cap. Okay, so that buying power has a monthly payment cap based on the term that you take, whether you take a 5-year, 6-year, or 7-year term, depending on what type of interest rate you get. Okay, so that those three things are going to happen when you're buying a car. But let me show you why this is not a big deal. Okay, a lot of people go through this even if they didn't file bankruptcy. Some people go through this just because their credit score wasn't the best in general. Okay, so now let me show you why this is not the end of the world and how you can get out of this situation. The very first thing that you want to do is, now you can try this at any time, but you're probably not going to get approved for it until about month, I would say 18. Okay, so I'm going to put in here after about 18 months. So 18 months or more, can you do this? And this is going to be refinancing. Okay, refinancing. And so to refinance, okay. Oh, spelled that wrong. Okay, refinance. Okay, so you can refinance that auto loan. Okay, now there's a couple things you need to know about refinancing an auto loan. Okay, number one, when you refinance an auto loan, the car has to qualify. The car has to qualify. That's number one. Number two, you have to qualify. Okay. Now let me take a step back. What does it mean by the car has to qualify? The car has to have a certain amount of miles. Usually, I believe it's no more than 120, 150,000 miles, but it depends on the type of year, make, model that the car is. Number two, it depends on how old the car is. Okay. So years and the age, I'm sorry, how old it is and how many miles it has is going to be the factors, okay, for the car to qualify. This is why some of you all have tried to refinance with a refinance auto loan company and you were not able to get approved. Don't worry, I got a solution for that too. Okay, I'm gonna show you guys in a second. Then you have to qualify. Now, in order to qualify for a refinance auto loan, at minimum, you need about a 620. Now, unless you have a relationship with a credit union like Navy Federal or something like that, then you can most definitely go ahead and probably get approved if you're around 580, 600, because they don't just look at credit, they look at the relationship that you've built with them. Okay, so that's one way in. All right, and so once you refinance that, you can lower that car payment. You'll have a better interest rate, you'll have better terms. Now, one of the things that people always ask is, Calvin, if I refinance an auto loan, doesn't that mean I'm starting over? Well, not necessarily. When you refinance an auto loan, there's two decisions you got to make. Okay. I'm sorry, really one decision you got to make. And that's if you're going to either keep the same term, all right, and then get a lower interest rate, or take the lower interest rate and then get a shorter term. Let me give you an example. Let's say you get an auto loan and you got a 6-year auto loan. It had high interest. Okay. Now, after 18 months, you now can go ahead and refinance where the numbers make sense. Okay. You may have to wait a little bit longer too, or you may have to put more money down technically. That's why I said you can technically refinance anytime, but the numbers start making sense around 18 months, 24 months, 36 months. depending on how much you drive and things of that sort. Now you do that. Now over time, some people will say, well, you know what? Well, what if I don't want to wait that long, or what if I get denied? Okay. Now again, you're not forcing yourself to do anything. These are just options to lower your car payment. Okay. So now the next thing is going to be, if you get denied to refinance your auto loan, what's another way that you can refinance your auto loan? Another way that you can refinance an auto loan is going to be to get a personal loan. Okay, to get a personal loan. Now I know what you're thinking. Well, Calvin, are you sure I'm going to get approved for a personal loan when I had a bankruptcy? Think about the timeline now. Okay, we had one credit card, we had two credit cards. Now we're probably in the three credit card range. We had the credit builder, we got the auto loan. So you got all those accounts building your credit up, and now you're getting a personal loan. Chances are you're more than likely going to get approved. You can use this as an option if you get denied for an auto refinance, or just to see what those options are going to be. I got plenty of videos on this channel about personal loans. I don't want to stretch it out on this video. Okay. All right. So you guys got that. Now we're going to go into the next piece, buying a house. Okay. Now don't worry, this will be a separate video as well too. But how do you buy a house if you had a bankruptcy? We're covering all of bankruptcy up in here. Okay. So now let me tell you guys something. Now I know what you're thinking. Well, Calvin, can I just get this disputed and not have to worry about any of this? Let me explain something to you that a lot of people won't tell you in the credit industry. There are software platforms out there in which banks can still see your bankruptcy. The only person that can't see your bankruptcy is you if you get it removed from your credit report. But you don't have access to these software platforms that only dealerships and mortgage lenders have access to, and they can see your public records. They can see student loans. They can see, bankruptcies. They can see this stuff. Okay, but anyway, just letting y'all know that. Next is going to be, and if you don't believe me, look up the company. It's called Fraud Guard. Okay, and there's a few others out there too. But either way, you have that. Now, the next thing is going to be home ownership. So now let's go into chapter 7. Well, matter of fact, I'm going to go ahead and just split this out because we're going to wrap up here in a little bit. Okay, so we're going to draw a line here. Okay, so we got chapter 7 and chapter 13. This is for home ownership. For home ownership. By the way, I know we got some new people that just came in here. I'm about to break down how to buy a home if you had a previous chapter 7 bankruptcy or previous chapter 13 bankruptcy. And by the way, I have a lot of the same stuff inside of my free credit guide. You guys can download my free credit guide right here on the screen. If you're watching this on your TV, you can take out your phone, scan the QR code, or if you're watching this on your phone or tablet, just go to the description, tap the link, and you can get the free credit guide. Okay. So now, chapter 7, and you're buying a home. How does it work? Number 1, you have to wait 2 years after discharge. Okay, so now you have to wait 2 years. Hope you guys can read that. I'll start writing slower. But you have to wait 2 years after discharge. Okay, 2 years after discharge. So that means if you have a bankruptcy in, let's say, May, okay, and then 4 months later, so you have, of course, May, June, July, August. Okay, so it's going to be 2 years from August, the discharge date. And don't worry if you don't know the discharge date. Lenders can look this up for free. They have access where they can look up your discharge dates for free because it's public record. Don't forget that, okay? Now, with the chapter 13, you have to wait 12 months after, no, it's really, no, I'm sorry, 12 months consecutive payments, okay? Now, we talked about a chapter 13, and a chapter 13 is pretty much a glorified payment plan. After you've made 12 payments, consecutive, on time 12 payments, anytime. So I say anytime because if you're 3 years into your chapter 13 and the most recent 12 months have been on time, you can apply for home ownership. If you just started a chapter 13 and you're 7 months in, you cannot apply for home ownership. When can you apply? after 12 consecutive months. After 12 consecutive months. Okay. Now, once you do that, what other things are going to matter? That's going to be number two. Number two is the lender is going to have you do what they call an LOE. An LOE. They're going to have you do an LOE over here too. Okay. And then number three, so I don't forget, I'm gonna put this right here and make sure you guys can see that. Can you guys see that? Okay, let me move my head. Okay, cool. All right, so now you got to get a trustee approval. Don't worry, I'm gonna explain what LOE means in a second. I just want to make sure I know what that was. All right, so now let's go ahead and see what this next thing is. Okay, next is going to be LOE. Now, with an LOE means letter of explanation. Okay, a letter of explanation means that you have to explain why you got into the bankruptcy or what led to the bankruptcy. Okay. Now, there's no right or wrong answer. They just got to have something on file. That's really, to be honest with you, but you can't just put in there, oh, I just felt like filing bankruptcy. No, it's going to be like, oh, I fell on financial hardship or whatever. Your lender will explain that to you. And there's a chance you might bypass this too. So you'll be fine. And then on chapter 13, they're more than likely going to ask you that as well too. Now, here's the thing. This is on this side right here. The trustee approval. Okay. So trustee approval is going to be on the chapter 13 side. Let me just put a line right there. Okay. My bad. So this is only going to be on the chapter 13 side. You'll need trustee approval. Now, why will you need trustee approval? So when you're in a chapter 13, you still need to get, you're still in the bankruptcy, okay? Unless you buy a home after your chapter 13 has been discharged, then you don't need a trustee approval, okay? But you will need trustee approval. And that's essentially where you say, okay, I want to buy a house. You present the numbers to the trustee, to your bankruptcy attorneys. They're going to get it approved by the trustee. The trustee is going to say, okay, this is the maximum payment. It's really a max payment that they're okay with you having. Okay. And then you get that, you give this to the lender, and then you can get approved for a home. Okay. And so listen, guys, that's how you rebuild your life. That's how you restart after bankruptcy. Okay. But listen, I know you got more goals than this, and I want to help you accomplish more in your credit life. Okay. If you're serious about increasing your credit score, qualifying for home ownership, qualifying for rental property ownership, lowering your car payment, listen, you got to do something about it. The reason why you are where you are right now is because of two things. Number one is information, and number two is execution. So again, you may not know what to do. We know what to do, and we can help you do that, okay? Inside of our 850 Club Elites, all right? So this is a monthly community, and so this is a great community to be around. There are people in there, in this community, that are serious just like you. And they say, you know what? I want to go into home ownership. So there are people that started in the 400s, in the 500s, in the 600s, and now they qualify for home ownership, okay? So again, you could do the exact same thing as them. So listen, you most definitely want to put yourself in position so you can qualify for home ownership, okay? And listen, take out your cell phones, scan this QR code. I'm hearing something beep. I can't wait to find out. I don't know what this is. Okay, I'm gonna find out what this thing beeping over here. But anyway, but listen, I'm telling you, that's what you want to do. Okay. And so again, you're around a monthly community, and you guys can, if you see in the chat, listen, Elite, where are you guys at? If you're a part of the Elite community, go ahead and put Elite inside the chat. We got Antoine in the building. Of course, we got Tiffany that's in the building as well, too. These are current Elite members. Tiffany says, join the family. Okay. Listen, shout out to Tiffany. And of course, shout out to Grinding for the Bag. Mike is in the building. These are all people that are either now in the 700s. And I met many of them, they were in the 400s, 500s, 600s. And a lot of them are now in the high sixes, high sevens, and they're progressing. They're getting approved for homes. They're getting pre-approvals for homes. So again, they are making things happen, in their credit lives. Okay. So again, scan the QR code right there on your screen, or you can click the link inside the description. I'm just letting you know that you do have a plan, okay? That's why we talk about action. That's why we talk about execution. This is what you want to do. These are the next steps that you want to take. But either way, guys, I'll see you all on the next video. Scan that QR code right here. And don't forget, if you didn't get my free credit guide, make sure you guys go ahead and download the free credit guide right here. You can scan this QR code or you can click the link inside the description below. But I'll see you guys on the next video.